Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hi everyone, and you're now plugged into Standard Chartered Money Insights. I'm your host, DJ Cheong, an investment strategist at Standard Chartered Bank, and this is the Weekly FX Navigator, where we talk about key FX drivers and catalysts for the week ahead. In today's episode, we will focus on the near-term outlook and potential opportunity for pound sterling, Singapore dollar cross, or sterling Sing for short. From a fundamental perspective, we expect a shift in the global growth outlook that will favor Europe compared to Asia in the coming months. The pound should continue rising as the benefit of faster domestic vaccinations and rising global growth supports the economy. UK political risk has also receded in the near term, and as lockdown shackles are released, we expect UK service industries to swing back into action. The Bank of England was also one of the first movers in tapering monetary stimulus, which suggests that interest rates could start to support the currency going forward as well. Meanwhile, Singapore is likely to require a little more patience as it confronts another COVID-19 outbreak, with travel and tourism unable to reset until the risk of accelerated transmission recedes. You know that we have renewed restrictions put in place recently if you are living in Singapore. On that note, as Singapore's monetary policy is largely managed through exchange rates, a gentle weakening in the Singapore nominal effective exchange rate, SNEA for short, would not be surprising if inflation surprises to the downside. Last week, sterling Sing broke above 188 and reached its highest level for almost 5 years, since June 2016. At that time, the pound was falling sharply against most currencies given the trauma around Brexit. In fact, that entire Brexit decline saw sterling Sing fall by over 25% from top to bottom. What we are watching now is the recovery and the prospect that the steady rise of the pound may soon accelerate higher from a technical perspective. We expect that any downside technical corrections in sterling Sing will be shallow and should hold above 185. Only a sustained break below there would turn the technical outlook neutral. Rather, we see the pair rallying towards 192.50 initially, which would be 50% of the entire decline we witnessed previously. Beyond there, the resistance level to note is at around 196. And that concludes this episode of the Weekly FX Navigator. For more on our latest publications, head to our website at sc.com and look for the latest market insights. If you found this insightful, please rate and review us wherever you get your podcast from. Thanks for joining me on the podcast today.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.